So hello, my dear students. So welcome to another discussion for accounting for business combination. So in this video, we shall be discussing intercompany sale of inventories. Okay, so subsequent to the date of acquisition, there may be intercompany sale of inventories between the affiliated parties. The meaning to say the parent and the subsidiary. So in this video, we shall discuss. So what are the working paper eliminating entries needed to eliminate these intercompany transactions between the parent and the subsidiary, and then what is the effect of this intercompany transaction in the computation of the consolidated net income between the parent and the subsidiary, and also ano yung effect ng intercompany transaction in the preparation of the consolidated financial statements. Okay, so intercompany sale of inventories between the affiliated parties may be upstream or downstream transaction. So upstream transaction is actually a sale of the subsidiary to the parent. Okay, so meaning to say, basta upstream, yung selling affiliate is si subsidiary, then yung buying affiliate is si parent. Okay, so downstream transaction naman is actually a parent to subsidiary. Okay, meaning to say, si parent yung selling affiliate, then yung buying affiliate naman ay si subsidiary. Okay, so but for the purpose of discussion, we shall be discussing muna a downstream transaction. Okay, so assuming the parent company sold goods costing 100,000 to its 80% owned subsidiary at 20% above cost. Okay, so ano yung entry sa books ni parent at saka na books ni subsidiary? So sa books ni parent, being the parent is the selling affiliate kasi nga 'di ba? It's a downstream transaction. Okay, so it will record accounts receivable in a credit to sales for the selling price. 'Di ba? So the selling price. So the selling price is actually 100,000 times 120% since it was sold 20% above cost. So that's actually 120,000. And then assuming perpetual inventory, the entry naman ni parent company will also debit cost of goods sold, credit inventory for 100,000, yung cost ng inventory. Okay, sa books naman ni subsidiary or ni buying affiliate, no, it will record the transaction at billed price. Okay, so therefore, the inventory of the buying affiliate includes the profit from the sale of the selling affiliate. No? So, kasi nga, gi-record niya at billed price. So, included yung profit no, ni selling affiliate. Okay, so, yun siya. So, debit siya ng inventory, credit accounts payable for at billed price amounting to 120,000. Okay, so, assuming that the subsidiary sold 60% of the goods to unaffiliated parties for 90,000. Okay, so yung entry ni subsidiary would be a debit to accounts receivable and a credit to sales for 90,000. And then it will record cost of goods sold. So since the subsidiary recorded the goods or inventory at billed price at 120,000, so therefore yung cost of goods sold niya is 60% of 120,000, being 60% yung nabenta sa outsider. So the debit to cost of goods sold in accordance to inventory for 72,000. Okay, so assuming yun lang yung transactions no, between the parent and subsidiary, or yun lang yung transaction nila ng two companies no, for the purpose of the discussion. So the parent will record sale or will report sales of 120,000 in cost of goods sold of 100,000, recording gross profit of 20,000. Also, the subsidiary will report sales of 90,000 and cost of goods sold of 72,000 for gross profit of 18,000. Okay, so it should be noted that the intercompany sale of inventories in the books of the selling affiliate will only be realized when the inventory coming from the selling affiliate has been sold to unaffiliated parties. Meaning to say, ma-realize lang yung transaction or ma-realize lang yung sale, no? Yung intercompany sale once yung goods mabenta sa outsider or third parties. Okay, so kasi they considered na sale for consolidation purposes yung intercompany sale. So we'll wait until the inventory will be sold to unaffiliated parties for it to be considered realized, no? So therefore, since yung intercompany sales natin is 120,000, then yung sale to outsider natin is only 90,000, the consolidated sale should be 90,000. So we are to eliminate the 120,000. Okay? And then, our cost of goods sold, for consolidated purposes also, our cost of goods sold should be the true cost of the goods. Okay, since the cost of the goods is 100,000 and we have sold 60% of the goods, therefore our cost of goods sold should be 60,000. Okay, then the consolidated gross profit should be 30,000. The consolidated sales of 90 and cost of goods sold of 60, therefore we have gross profit of 30,000. Okay, also the subsidiary, being the buying affiliate, will report inventory. Diba? So, ang pagka-report ni subsidiary sa inventory is at billed price also. Kasi, diba, ito recorded 120,000 as purchases. Diba? Then, since 60% yung sold to outsider, so the subsidiary will report 40% of those goods, which is 48,000. Okay? But for consolidated purposes, we are to eliminate the markup or yung profit, no? Profit included in the ending inventory reported by the subsidiary or the buying affiliate. So, since 40% yung inventory, then yung cost ng goods is 100,000. Therefore, the consolidated inventory should report 40,000 of goods. Or that's actually 48,000 divided 1.2 or 120% to get the cost. Okay? So, our working paper eliminating entries for that is first, we are to eliminate intercompany sale transaction. Okay? So, eliminate natin yung sale, intercompany sales. So, debit a sales, credit cost of goods sold for 120,000. Okay? Yan siya. And also, to eliminate the profit, no, in the ending inventory, which is actually 8,000 kasi yung build price is 48,000 and the cost is 40. Therefore, its a markup is 8,000 or actually 48,000 times 20 over 120 now to get the markup. So to eliminate the profit included in the ending inventory of the buying affiliate, so we'll debit cost of goods sold, credit inventory for 8,000. Okay, so ano yung effect ng consolidated, yung working paper natin in the consolidated sales and consolidated cost of goods sold. So since the parent reported sales of 120,000 and the subsidiary also reported sales of 90,000, then we eliminated 120,000 na sales. Therefore, the consolidated sales is 90,000 na lang. Okay, which is actually, di ba, our should be consolidated sales, yung sales to outsider. And then yung consolidated cost of goods sold natin. So the parent reported cost of goods sold of 100,000 and the subsidiary also reported cost of goods sold of 72,000. Then yung eliminating entries natin, di ba, we've credited 120,000 and we've debited 8,000. Therefore, it's a net credit of 112,000 or a deduction, no, of 112,000. Therefore, our consolidated cost of goods sold is 60,000. Okay, so by this eliminating entries natin, yung cost sales natin would be at 90,000 and then our cost would be 60,000. Okay, so assuming on year 2, the parent company again sold goods costing 150,000 to its subsidiary at 20% above cost. Okay? So, yung entry ni parent dyan would be accounts receivable credit sales for 180,000. That's actually 150,000 times 120%. Okay? Kasi 20% above cost yung markup. And then also it will record cost of goods sold credit inventory for the cost, 150,000. And again, the subsidiary will record the transaction at billed price. Meaning included yung profit ni selling affiliate, no? So therefore, the entry would be debit inventory credit accounts payable for 180,000. Okay? So assuming further that the subsidiary had sold 75% of the current year intercompany sales plus the beginning inventory to unaffiliated parties for 285,000. Okay? So again, the subsidiary had sold 75% of the current year intercompany sales plus yung beginning inventory natin, no, for 285,000. Okay, so the entry for that, for in the books of the subsidiary, of course, debited accounts receivable, credit sales for 285,000. And then, the subsidiary, no, yung entry for the cost of goods sold. No? So since my beginning inventory is subsidy na 48,000 plus purchases of 180,000, so therefore my goods available for sale siya at 228,000 less ending inventory which is 180,000 times 25% since 75% yung nabenta. No, so therefore my ending inventory na yung 25%, which is actually 45,000. So therefore, the cost of goods sold is actually 183,000. Okay? Or that's simply 48,000 plus 180,000 times 75%. So, pwede na yun. Okay? So, assuming pa din, no, na ito lang yung transactions between the parent and the subsidiary, no? The parent will report sales of 180,000 and then cost of goods sold of 150,000. So the parent reported gross profit of 30,000. And then the subsidiary reported sales of 285,000, the cost of goods sold of 183,000. So the gross profit is 102,000. But again, for consolidation purposes, so the sales should be recorded is 285,000 lang kasi yun naman yung sale to outsider. Then, di ba, hindi man considered sale for consolidation purposes, yung sale between the parent and the subsidiary. So therefore, our consolidated sales should be 285,000. And then, our cost of goods sold is actually dapat cost ni 183,000. So, parang we'll compute lang cost of goods sold na at cost. Kasi yung beginning inventory natin, di ba, at cost is 40,000. No? Kasi 48 yung build price, yung cost niya is 40,000. Plus the purchases at cost, which is 150,000, ito yung cost, no, ng goods na gi-ship ni parent kay subsidiary. So the gas is 90,000. Then the inventory, which is 150,000 na goods times 25%, that's 37,500. So may cost of goods sold tayo na 150,500 for consolidated purposes. Na assuming na yung transaction is ito lang, ha. Okay, so therefore, ang tama na cost should be 152,500 and then yung tama na gross profit should be 132,500. Okay? So, what would be the working paper eliminating entries for that? Okay, so first, we are to eliminate the intercompany transaction. Okay, diba? So, well, debit sales where credit cost of goods sold for 180,000. Okay, so by this entry, actually, wala siyang effect sa consolidated net income kasi you've debited sales at cost of goods sold for the same amount, diba? Okay, so this entry would be to eliminate the intercompany sale transaction. Okay, so first is to eliminate the markup in the ending inventory. Okay, kasi yung yung gi-report na inventory ni subsidiary being the buying affiliate is 45,000, diba? And then its true cost is actually 37,500. So may markup yan na 7.5. Okay, may markup yun na 7.5. So, we are to eliminate 7.5 kasi, di ba, the reported inventory should be at cost. And then, the markup reported by the subsidiary being the buying affiliate includes the markup na 7.5. Okay? Then, our next entry is actually to eliminate the profit included in the beginning inventory. Diba? Kasi, or ito yung realized gross profit. No, realized gross profit. Okay. Kasi itong second entry natin, this is actually the unrealized profit in the ending inventory. Kasi nga, 'di ba? Ma-realize lang yung profit once it has sold. So kung if it remained it remained in the inventory of the buying affiliate and therefore unrealized yung markup or yung profit, no. So since yung beginning inventory was already sold, 'di ba? So therefore na-realized, no. So the profit included in the beginning inventory is actually realized. So the entry for that is actually a debit to retained earnings and a credit to cost of goods sold for 8,000. So since this is downstream transaction, so we'll debit lang retained earnings. Okay, so kasi non-controlling interest will only be affected if it's an upstream transaction. So since this is a downstream transaction, so yung um, yung entry natin should be debited down to retained earnings. So walang shares in non-controlling interest. Okay? So sa profit included in the beginning, inventory. Kasi nga 'di ba, yung inventory mo is overstated. No, overstated yung inventory mo kasi overstated yung beginning inventory na report ni um, branch, being a buying affiliate. Okay, so that's the three entries now. So first, to eliminate the intercompany transaction, sale transaction. Second entry is to eliminate the markup included in the ending inventory. And then the third entry to eliminate the profit included in the beginning inventory or yung realized profit in the beginning inventory. Okay, so ano yung effect ng working paper entries natin? First, for the consolidated sales, so the parent reported sales of 180,000 and then the subsidiary reported 285,000 of sales. We have eliminated 180,000 as sales, then we have 285,000 as our consolidated sales. Then as to cost of goods sold naman, the parent reported 150,000, the subsidiary reported 183,000. Then yung eliminating entries natin, no? So we've credited cost of goods sold for 180, we've debited cost of goods sold for 75, and we've credited cost of goods sold of 8,000. Okay, so therefore, the total credit of cost of goods sold is actually 180,500. Okay, so yung, di ba pag combine natin yung cost of goods sold ni parent, sa ni subsidiary, plus or minus the effects of working paper eliminating entries. Therefore, after the eliminating entries, we have cost of goods sold or consolidated cost of goods sold of 152,500. It's actually same sa computation natin kanina, yung 152,500. Okay, yan siya, no? So, this is actually the entries, no? How to eliminate the intercompany transactions, no? So, from these entries, now we have come up with the formula. So, formula natin. So, to compute pala for the consolidated sales, actually sales ni parent plus sales ni subsidiary less intercompany sales at billed price for the current year. So, lahat ng intercompany sales natin, whether upstream or downstream, should be deducted to get our consolidated sales. Okay? For consolidated cost of goods sold naman, ito yung cost of goods sold ni parent plus cost of goods sold ni subsidiary less lahat ng intercompany sales transaction at billed price. Then, we are to add lang unrealized profit in ending inventory, no? Then we are to less realized profit in beginning inventory to get your consolidated cost of goods sold. So, yung unrealized profit natin, that's included yan siya sa ending inventory nag-report ni buying affiliate, may it be si parent or si subsidiary, no? And then also the realized gross profit in the books of the in the inventory reported by the buying affiliate, no? Yan siya. We need to determine, diba, our consolidated cost of goods. So, okay. Also, to determine the effects of working paper or effects ng intercompany transactions in the computation of the consolidated net income and then net income attributable to parent. So we have here our net income, net parent, and subsidiary, diba? Then, diba, we are to deduct dividend income or investment income to determine the net income from own operations. Okay, but if the problem is stated that the net income is from the operations lang of the subsidiary or the parent, then there's no need to deduct the dividend income from it, diba? Kasi pag net income lang, then pag net income lang, so posible na andun yung included siya sa dividend na declare ni subsidiary. Okay? So, first is you have to determine, no, whether the transaction is an upstream or downstream transaction kasi it may affect the computation of our consolidated net income attributable to parent. Kasi dapat mag-adjust ka sa income kung sino yung selling affiliate, 'di ba? Sa upstream transaction, 'di ba, ang selling affiliate is si parent, as si subsidiary. Okay? So therefore, you are to less unrealized profit ending inventory and then you add realized profit in the beginning inventory. Sa books ni subsidiary. Okay? Ideduct mo yung ending, unrealized portion in ending inventory kasi 'di ba, um, hindi pa man siya na sold to outsider. So, yung profit included in the ending inventory is reported in the buying affiliate is actually unrealized. No, so and then we are to add realized profit in the beginning inventory reported in the books of the buying affiliate. Yun siya. So again, since this is an upstream transaction, the selling affiliate is si subsidiary, no? So therefore, kay subsidiary ka mag-adjust. And then if it's a downstream transaction, yung ano natin, yung selling affiliate is si parent. So therefore, sa kanya ka mag-adjust. So i-deduct mo yung unrealized profit in ending inventory and then you add your realized profit in the beginning inventory. Say to get your consolidated net income and then you deduct NCI share, no? In the net income of the subsidiary, which is actually a certain percentage, no? Yung NCI net income natin. Then consolidated net income less NCI net income of the subsidiary equals net income attributable to parent. Okay? Okay, so that's it for the first part of our discussion. So I'll have a second part to discuss no some sample problems no in relation to intercompany sale of inventory. So thank you.